folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated? Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, everyone.
Morning.
Doing well today. Happy Wednesday.
Welcome in.
Welcome, welcome. Already got 35 people on. Nice. Let's go.
Damn.
Got a little bit in store for you all today. Of course, drop your location, drop any pairs you guys are looking at. We'll try to go over as many as you guys have that we see setups on today. Hope you guys are doing well all over the world. Good morning. Good morning. Where are we from, guys? Where are we from? Let's see where you guys are streaming in from. Good morning, Andy. Good morning, Mark. Brian, good to have you guys on. UK, Manchester, nice. Got Texas. Beautiful. What part of Texas? Singapore. Awesome. Gold. Sorry, guys. We only trade Forex here. No gold. No US 30. No anything like that. No S&P. South Africa, Morocco, Kenya, Nigeria. Another Manchester. Nice. Alberta. Beautiful. Oh, yeah. Coastal Bend. Nice. Texas. Jamaica.
Wellington, North Carolina.
Wellington.
How is that even possible?
That is hilarious. Went to Campbell University.
Wow. That's what a coincidence.
Very familiar with Wellington.
County seat.
Euro USD, India. Yeah, let's see, Australia, GCAD. I think that's a pair we have today. And Chef, I think that's another one. That might be on my list. Yep, that is on my list. The Coups. Is that how you spell it? Joburg, South Africa. A lot of South African here. Yeah, Pretoria, South Africa, Joburg, Stellenbosch.
I want to know who our Wellington guy is. Send us a message on Telegram. It's funny.
Yeah, Aiden and I graduated from Campbell University a couple years ago.
Mm-hmm.
Yep.
Never mind. I won't go there.
Yeah, Serbia, Algeria. Good to have you guys on. We'll get started here in 3 minutes. We're gonna wait until 10 after. Let people trickle on in, and we'll get started. You guys have any at all suggestions about any future live sessions, any specific things you guys want to go over? You know, we did a psychology live session a few weeks ago. I don't know what else you guys would like. You know, always down to take suggestions. This is all for you guys. This is completely for free. This is week 2 of 4. So obviously we're on for the whole month of May, and then we're off in June. So definitely stay tuned for these live sessions. I actually will not be holding one this Saturday. I have some stuff going on Saturday morning. So unfortunately, we will not be getting on. Risk management. Yeah, I'll even go over risk management right when we start here today. It'll be super sweet. About 1 to 2 minutes, I'll tell you exactly how I go about doing it. And it's super, super easy. But the thing is, guys, you have to stick to it. You know, risk management is probably one of the easiest things to do. but it seems to be difficult for a lot of people. See, if you can't do the little things right, you'll never and ever end up becoming successful. That's just the real truth of trading. You have to do the little things right. And risk management seems to be a very difficult thing for a lot of people to do, but yet is, I think, probably the easiest thing for me to do, because it's the same thing every single time. It's just following a series of steps.
It's systematic.
Discipline. Yeah, it has to be a systematic approach.
You can't be emotional about it.
Yeah, there's no subjectivity when it comes to your plan.
It's one of the easiest things to do when it comes down to trading psychology is risk management, actually, right? Because it's literally systematic. It's what's 1% of your account, and that's all you're risking, right? Other things are more difficult to control with your psychology.
Yeah,
but risk management really shouldn't be one of them. I mean, it's just, if you're still risking over 2%. I mean, 2% maybe is fine, but anything over and above that is just way too much. Pointless. Way too aggressive.
Mm-hmm. Why we didn't upload Smart Money Sundays? Not sure.
Yeah, I didn't upload this weekend, guys. My apologies. I was traveling for my little sister's graduation, so I was with family. But we'll get it back going this weekend. No worries. I did share analysis with our VIP group.
No, Brian, for GBP Swiss franc, I didn't take it because it's not one of my pairs that I trade. It did meet my rules. I don't think I said it didn't meet my rules. It was something I called out within the prop firm funded signal service and also our VIP. All right, we'll go ahead and get started here, guys. If you have any questions, just drop it in the chat. I can't see the chat as I'm breaking down charts. Aiden's going to be monitoring the chat. He'll try to answer as many questions as possible, and we'll get started. So quickly, before I get going, I'm going to just present my screen here. Here we go. All right. Aiden, are we good? Can you see this? Can you hear me fine?
Yep, gotcha.
Okay. One of the biggest things that people still have problems with is risk management. So I'm going to clear this up. Super, super simple. And this is something that's not really a recommendation. This is a requirement. So anyone who wants to be a successful trader, this is not me saying, oh, I recommend you use good risk management. No, you have to, or you will never be successful. I am always straightforward with you guys. There are certain things that people do that I see that just prove their ignorance, and that they will never, ever, ever end up becoming a successful trader because they can never seem to get out of their own way. So risk management is one of the simplest things to do, and you just have to stick with it, right? So here's how I go about doing it, right? If I have an opportunity, right? So last week we called out this level of demand here on GBP Swiss franc, right? We had two positions. Both of them had entries here. So both were entered at the same price. One had a stop loss below the overall demand, and one had a stop loss below the overall low, because this is the low that generated this high. So this is the entire trading range before the structure was broken, right? So that's why we had those two positions. So if I scroll over to the right, you will see that these two positions are what we were looking for. So this is what we called out here and here. So let's just say, just to make it very simple, that we only had one position. So let's only look at this position here. Let's say that was our only one, right? So entry, stop loss. Let's just say we had 3 take profits, right? Maybe take profit 1 was at this area of supply. All right, so just in case we ended up continuing with this counter trend, we would have gotten out at that first take profit and then move stops to break even, right? Why would that be appropriate? Because that would be a level in which price could potentially fall from our level, right? If price were to continue with the counter trend, that's where it would do it. So not right here, not right here, not right here, but like right in here. That would be the level in which price would need to push up into before having a potential fall from that level of supply, right? And then obviously we're not looking to short. We're just looking to take partials at these levels in which price could potentially reverse from us. So guys, I recommend, now this is a recommendation, I would recommend you guys start looking at your partials regions, not from a level of your the dollar amount that you're in profit on or the risk to reward that you're in. Like if I'm up a 1-to-1 or 1-to-2, that doesn't mean I'm taking partial. That shouldn't be a part of your trading plan. You need to be taking partials where the market is not necessarily going to reverse from you, because we're looking for longs. All signs are pointing to longs. So obviously we're fully expecting a higher high to take out buy side liquidity. But what if price goes against you? Because nothing's 100% guaranteed. So you have to be looking for the opposite direction in which you're trading, right? So obviously we're looking for longs here. So look for sells. Obviously don't sell it because you're looking for longs. But if you were going to sell it, where would be a likely region in which price would bounce from that level, right? And that would be just the previous level of supply here. So that's where you need to put TP1. TP2 could be above the previous swing high, maybe around a psychological level. So maybe like right in here, 1.1250, it's a psychological level. So that could be TP2, and TP3 you could just hold as more of a swing trade above, higher time frame liquidity, equal highs, or maybe above into a higher time frame supply, right? So if you have 3 take profits, that means if you're risking 1% per trade, 3 take profits, you need to split that 1% into 3 positions. So what would you be risking every single trade? And you all took math in school, right? So 1 divided by 3 is 0.33, repeating essentially. So 1/3% risk for each trade. Every single trade will have the same entry and the same stop loss, but each trade would have different take profits. Why do we do that? Because we don't want to manually be taking partials. That's stupid. If you're sleeping and it hits your first take profit and you don't get out, why? Why does that seem to be the case? It's something that we can 100% control. Right? So we need to make it as easy as possible on ourselves and do the little things right. Because if price pushes up into your first take profit and then you're sleeping and then price is falling and then you wake up and price is just sitting around your break even, you have made no money. Whereas you could have just taken a little bit more time, split up your positions. Yeah, it takes an extra couple of minutes to do so, but at least you would have gotten out right there and made some money, right? So just doing the little things right is what separates amateurs from professionals. So if we have 3 take profits, 1/3 risk each. So let's just say, you go here, go to my FX book, have it as a part of your tab. Every single solitary day, you need to have this right on your screen. If we're trading GBP Swiss franc, we'll go down to G-Chef. My account is in USD. Let's just say, we have a $100,000 account. Let's type that in. So if I have 3 positions, I'm going to be assuming 0.33% risk each, right? Stop loss in this case would be 57 pips. 57, you click calculate, you keep this at 1, and then it would be 0.52 lots. So that is what you would be risking per position. So 3 0.52 lots each. So that way, if price just falls, well, then you lose only 1% in total. All right, but each 0.52 lot keeps your risk the same every single time. If you just had 1 overall take profit, right, then you would just obviously make this 1% risk. Click calculate, and it would be 1.57. We can see 1.57 divided by 3 is 0.52. All right, that's how we can kind of derive that. So that keeps your lot size or your risk the same every time. Because if you're arbitrarily just placing a random lot size or using like a standard lot or 2 standard lots per trade, you're going to have a different risk every single time. Because if you're using 1 standard lot for a trade that has a stop loss of here, you're going to lose X amount of dollars or X amount of percent. Right? Then you have a 1 standard lot for a stop loss that's right here or right here or right here or right here. You're going to lose different amounts every single time, and your risk is never going to be the same. So risk management is one of the easiest things to control. You just literally you pull up your risk to reward tool based upon where you have your entry, where you have your stop, where you have your take profits. Go to position size calculator. It's by my FX book. If you type it in, position size calculator, it's the first one that pops up on Google. And then you just type in your parameters. Click calculate, and it gives you the lot size to use. If you can't do that, guys, if you cannot seem to just be disciplined with that, it's going to be very difficult for in your trading journey. It really is, because this is such a simple concept to understand. Right? Risk management is something that you have to do. If you don't want to do it, then don't expect to make long-term consistent growth and money. It's not going to happen. So you have to utilize good risk management. So if you have any questions about that, feel free to let me know. The reason why I'm so blunt and so straightforward is because you guys need to know the hard truth when it comes down to trading. I don't sugarcoat anything. I'm always straightforward with you all. So anyways, let's just go through a couple pairs. I'm not going to take too much time for each of them. I'm going to have time for Aiden to go over some of his pairs as well. So, to be quite honest, guys, we didn't have much movement since Saturday's live session. Right, so we talked about pretty much the same thing. So if you haven't watched Saturday's live session, it's about 2 hours long, which we break down pretty much all of the pairs. It's definitely something you should be looking at doing. We hold them on Saturday, so maybe take an hour, per day on the weekend, 1 hour on Saturday, 1 hour on Sunday to complete the entire live session. At least you know exactly what I'm looking for the entire week so you can be prepared. So anyways, AUD/JPY, we're looking for the same level. We haven't come into it yet. We can see that we're still pushing to the upside, making higher highs and higher lows on the higher time frame. Yes, we are in this counter trend retracement, in this counter trend downtrend, and we did come up into a prior level of supply at that last point of return, right? Because that's our previous high that made this low. So this is the trading range. This is just one overall pullback. Could we see a lower prices? Potentially, but we've come into a higher time frame level of structure. So I wouldn't be surprised if we have continuations to the upside. So especially because if we scale in here, you know, we had 1 drive, pullback, 2 drives, pullback, 3 drives. We had the pullback and we had reactions from our levels of demand, and then we broke the counter trend structure. So because we had the reaction, especially because we had the reaction from our higher time frame level of supply, and then we had the reaction from demand. So we never had that follow through to the downside and that break of structure. We've reacted from our first level of demand. We didn't come into our second one, which is why we had 2 entries. So currently sitting in profit on this one at the moment. We're looking for continuations to the upside. So I'm looking for further longs, and that would be in and around this 90 level. 90 is a psychological level, kind of is in this overall region of demand down in here. We also have lower time frame imbalance. We just scale in. You know, this was really our last selling volume, and then we just had that huge, strong push, and then we had a little retracement. So in here is that imbalance. So we could dig a little bit deeper into that 89.7 region. So that's what I'm looking for. I'm looking for overall continuations to the upside. We can see if we pull a trend line from here to here, we're building trend line liquidity. So retail, before this was formed, let's just bar replay it. Retail was probably looking when price comes back up into that third touch of the trend line, because they need 2 reference points, 1 and 2. So when price comes up into this trend line, they're probably looking to short it. So let's play it out. Well, I'll just exit out of it. And now it's right here. So they're probably looking to short here, which creates liquidity resting above this trend line. So this descending liquidity we're likely to take. So if we have a retracement back down into these levels, we can have conviction that price is likely to go long because there's trend line liquidity to the upside. And at least we know we're at least counter trend bullish in this sense, right? So that's what I'm looking for AUD/JPY. Very similar to AUD/JPY is CAD/JPY. And for CAD/JPY, we haven't come up into higher time frame levels yet. So even if we were to go short, right? Let's look at the counter trend first. The counter trend is bullish, right? We've broken the structure high. So even if we are to go short, we're in this overall pullback phase, because that's what a higher time frame trend is. It's lower time frame swing points for then a lower time frame break. Lower time frame swing points for a lower time frame break doesn't mean that we're breaking structure and we're just going to go long. It just means we're likely in an overall retracement, because on the higher time frame, it is lower low, lower high, lower low, right? Same thing in here. All these little tiny swing points, I guarantee you, if you scale into a lower time frame, there's going to be little mini trends within here. Higher high, higher low, overall pullback. This is one overall pullback on the lower time frame. So it could be a lower time frame trend. We broke to the upside. This is just one overall pullback, which would be a mini trend here. Same thing goes here. Breaks, just an overall pullback. So the markets are all fractal. It's just your perspective on it. So if price is going to go short, and if we're counter trend bullish, where is price likely to go short from? Probably the previous level of supply on the higher time frame. So back up into premium price, just pull your fib. And of course, we don't trade from fib levels. This is just to show premium and discount. 50% is that threshold for premium, right? We need to get at least above the 50% for us to be technically in premium price. And we haven't even done that yet. So we know that price is likely to continue long, at least for the short term, before potentially having an overall retracement to the downside or overall continuation. So we can see that our 2 levels of supply would be here, and then potentially back up into here. That's unmitigated because we have a lot of imbalance, just sell side imbalance. So we can see we swept sell side liquidity here, sell to buy, and then we started this uptrend. So let's scale into a lower time frame. And on the lower time frame, we're just creating a trend. High, low, high, low, high, low. We haven't made a higher high yet, but we still have room to go to the upside. This is our overall objective. So even if we get a pullback here, I'm still looking for continuations to the upside. So our 2 levels from Saturday, just zoom in here. 2 levels from Saturday, because we got in off of this level here. This is a beautiful trade that we took last week. Had an area of demand, accumulated into that area of demand and expanded. So now this is the new range. We're looking for overall pullbacks. Where's the last selling volume? Right in here. Boom. That's why we had that entry, and then price is starting to go long. Why did price create liquidity here? Well, we have to build up liquidity before, pushing into certain levels. So we build liquidity, right? Head and shoulders, enticing sellers below the neckline, and price goes long. All right, so now we can see continuations to the upside. So we have two potential levels here. We've come into this last point of return. If price were to come lower than this level here, I wouldn't expect price to go long. We would probably be in for an overall retracement. And at that point, because technically we're still bullish until we at least reach this level, 104, of course, nothing is guaranteed, guys. If I say that this is the overall objective, don't take it as scripture, right? That doesn't mean it's going to happen. It just means that this is a likely point in which price should push up into before any significant move happens to the downside. So would I be still looking for this level here, this overall level of demand? Yes. Why? Because then we look at the higher time frame structure. High, low, higher high. This could be a higher low for a higher high, right? Expansion, pullback, expansion. This would just be a lower time frame trend that was broken. We wouldn't look to go short. We would look to just have that overall retracement for continuation. So this is why I'm still looking for these overall zones down in here. But of course, we haven't broken lower time frame structure yet. So we're continuing to look for continuation to the upside. So we've broken counter trend, obviously. Now we have 99.5 psychological level and then this 99.2. So this last selling volume, area of demand, and then sort of this imbalance in here. So that's sort of what I'm looking for across the board. All these XXX yen pairs are looking to push higher. Euro AUD. So on the higher time frame, yes, we are significantly bullish. However, we have broken counter trend structure to the downside. So this does not mean that we should just be looking for overall shorts. It just means that we could be in for an overall retracement prior to continuing long. So if I were to guess and have a higher probability chance of where a price could come into, I think that, when we had this equal lows, the huge sell to buy, we left a lot of imbalance in here. And I think this general zone, if we can see on the lower time frame, there's this level of demand in here, that repricing. We could come up or come down into that level, and we can see we haven't reached that yet. So if price were to pull back into these two levels, we can see 1.65, 000, that's a psychological level. And then this repricing event here. Why is that a good level? Well, just look at the counter trend. Lower low, lower high. Lower low. So what do we naturally expect? A lower high for a lower low. Okay. So where's that last buying volume? Right in here. Because if we scale into a lower time frame, the counter trend, something that we look at all the time, high, low, failed, lower low. We failed to generate that higher high within this pullback, right? And we can see that to build more confluence, we had 1, 2, 3 touches of this trend line. Retail started to sell here. We manipulated higher, pushed lower, repriced, shorted off. So that would be that level of supply in which we'd be looking for price to come into. So we haven't reached our overall objective points, meaning this level here, maybe these two levels of demand. So if price pulls back now, we could be in for one more drive to the downside before going long again. So that could be something we look for. Now, if price comes into this level first, or any of these levels, and starts to go long, then these levels become less probable. Because at that point, we would reach these objective points and price could end up just continuing long. Not to say that we can't take a short from here. You just have to be very careful, maybe reduce risk significantly. So the highest probable chance that we go short is if we pull back now before reaching these levels, because if we do so, 1 drive, 2 drive, 3 drive, it would have that excuse to push into the objective, right? So that's how we can kind of build probabilities even in the counter.
And if you pull up, Nate, GBP AUD, there's a very similar situation type of setup with that one as well. With 30-minute at 1.8825.
Yep, we'll be heading that way in a little bit. We'll talk about that level for sure. EUR and GBP. So had a great trade last week that we called out, even within the signal service for our prop firm. So anyways, we can see that we're still bearish, counter trend at least, right? So we're still following the trend until it breaks. So where is our prior structure? Well, this is the high that generated this low. This is just an overall pullback. This is just one overall retracement. So we create equal highs, we sweep the liquidity, come up into our last buying volume, and we short off. All right, just keeping it very simple like that. All right, so now counter trend, high, lower low, we've broken structure, And now we can be looking for pullbacks into our prior levels of supply. Where is that? Where are those levels of supply? Well, our last buying volume. So we have one right here, that doji, and then one on a lower time frame right here. We didn't get that second fill, but we got the first one, and now we started to rally lower. So where is our objective? Where is price likely to go long from if it's going to? Well, we are a very bullish market. We have equal highs on the higher time frame. So I do expect price to go long. Now we are coming into that objective point at 8660 because we can see this is, within this overall pullback before we made a higher high. We have this huge imbalance, this straight buying volume right here. So this could be a point where we sweep all the sell side liquidity and then go long again. So if price comes into this level first and then starts to go long, I don't know if I'll be looking to sell anymore. But until it comes into here, if it pulls back now, then we could be in for a potential shorting opportunity. So I was originally looking for on Sunday when the market opened, I talked about this. So I talked about this on Saturday's live session. So Friday, Sunday, the market opened like right in here. So I thought, okay, well, lower low, lower high, lower low, we could be in for an overall pullback into our level of supply here for continuations lower into that objective. And we can see we just kept trickling down. So as of right now, it's still valid. But if we come into 8660 first, which is probably going to happen, then I'll probably no longer be looking for shorts at that time. All right. So that's EUR GBP. Don't really have much. And remember, guys, beginning of the week has been very slow. We had pound and euro bank holidays. So the pound and euro were very, very, low volatility, had low volatility. And, the markets were just generally slow. We had a lot of consolidation to start the week. Hopefully we can pick up this week. We're just kind of waiting for our setups. No need to force anything. GBP Swiss francs. This is something we talked about earlier. So we had that reaction from our original zone here. So we accumulated into a level of demand. So the reason why this is demand is what we can see sell side liquidity run, all of that liquidity run very, very swiftly. Huge sell to buy on a lower time frame. You had a repricing. So that was that last point of demand. I think if you scale into the 15-minute, you can see it. So we came into that level very nicely, accumulated, and then the counter trend was broken to the upside. That's why we were looking for that level of demand, because that was our last selling volume that within this counter trend failed to generate the lower low. And instead we broke and made a higher high. So that's why we bought it from that level last week. And we're still holding this trade. So higher high, higher low, we failed to generate that lower low. We made a higher high again. So what do we naturally expect? Overall pullback again, higher low for another higher high. So where are we looking at? Well, just our general zones. We have a lot of imbalance here, just straight buying volume. So we want to fill that imbalance, offer shorts within this level of price, meaning if price can come down, it would offer shorts. And then we look to go long. So we have the imbalance fill in and around 1.115 psychological level. And then the overall selling volume, which starts right here into this level of demand, would be in and around that 1.116550 level. So I really do like GBP Swiss franc for continuations. What I'm also looking at right now is this wedge pattern. So if we have one of two things happen, this would be really good because we're building liquidity in either side of the market before making a move. Right, so we can see on a lower time frame, if we extend this trend line 1, 2, 3, I guarantee you this wick is probably some sort of lower time frame, like maybe 15 or 10-minute candle that closed above it. Probably retail is looking to buy, and then it could potentially short off. So trapping them long before going short. If not, this could be a potentially equal high situation. Oh, it's terrible drawing. Equal high. I can't draw my lines today. Right there, equal highs. But anyways, what we could see potentially is a breakout. Even further, entice buyers, come back down, take their stops, entice sellers below this break of the lower wedge here, come into our level and then go long, that type 2 manipulation, buy to sell to buy. Or what we could do is just break out sell side and have the sell to buy, enticing sellers below the breakout of this wedge, because that's what retail is looking for, these wedge patterns. They look to trade patterns, which doesn't make sense, but whatever. But either way, we're looking for buys in and around these zones. If we scale in, we can see beautiful price action in the way that we accumulated and just delivered price in this region. So we accumulated into this region of demand in which we were looking to buy from, right? So we accumulated and went long. So why do we stop right here? Well, all these trend traders who don't understand higher time frame are probably looking to sell within here. If price were to go short, well, that's where we're taking our first profit. Right? So, well, really up in here, that's our supply. So that's where we would have taken our first partials. But anyways, Retail was probably looking to continue with this trend, having no understanding that this is demand. And then it goes short from this level, and then it doesn't make a lower low. It stops and makes a higher high. So that is our overall area of demand, that supply to demand flip, right? That's what we can do. So looking at this even further, on a lower time frame perspective, we're creating a wedge. 1, 2, 3 touches, 1, 2, 3, 4, 5 touches here, sell to buy. Enticing sellers, really it was just the mitigation of this sell to buy move here that we can see we generated liquidity in here. We broke out, enticed sellers, and went long. So trapped them short, took their stops, come back down, mitigate that level, which is also the fake out of this wedge. And then we continue long. So we can see how smart money is coming into play every which way here. So with that being said, stops would likely have to just go below this low. That would be fine because that's the end of the manipulation or the end of the mitigation. So first entry could go here, second could go here maybe. If we come a little deeper, stop loss would have to go below that low in and around that 111 level. So that's what we're looking for continuations to the upside. Definitely think that we can go long, just have to be patient because the markets, again, we can see just have been in consolidation this whole week. So that's G-Chef. GBP CAD. So GCAD, we have a potential short opportunity. However, we're still counter trend bullish. So within the higher time frame, we finally come back up into our premium supply level, right? So lower low, lower high, overall lower low. Now this was back in 2022, so early last year. So this is just, could be an expansion pullback. Could it be another expansion? Potentially. I mean, this was just our previous pullback phase, right? So we finally are coming back up into these premium levels. We had 2 levels of supply, and we can see that we're starting to see a reaction from the level. So we're starting to see the reaction, and we have equal lows. So even if we are to continue long, right, we could see a potential counter trend opportunity pull back for continuations. Because we can see higher high, higher low. This is all one expansionary move. Higher high, we could get an overall higher low for a higher high. We have equal lows, so that we would take sell side and then go long into demand. Why is this demand? Well, what do we always say? Look at the counter trend. Lower low, lower high, lower low, lower high. Failed to generate the lower low, higher high. So that would be that last selling volume that failed to generate the lower low here within this pullback that ended up stopping and making the higher high. So this will turn into demand, which is great because we have sell side liquidity resting below here. So that would be the excuse to sweep liquidity before continuing long, having that overall retracement for overall continuations if we are to go long, right? So we're having a reaction at this point in time. So we are still bullish. We do have to be careful, but we can see that we've made a high, we've made a low, we've made a higher high, we've made a lower low. And now this is our last buying volume, or really up into this doji candle here. So either way, stops would have to go just above the high. But we could see pullback, failure to generate the higher high, and then the lower low. What would be more probable is if you don't catch this move and you want to wait to see what kind of reaction we have. If we make a lower low like this, then that would be okay. We made a high, we made a low, we made a higher high, we broke in structure, and we failed to generate that higher high in this overall uptrend, and we made another lower low. So that 1 drive, 2 drive, now a more highly probable setup would be at that 3rd drive to take out sell side liquidity. So not to say this is more risky, but we still are overall bullish. Could this be a sell side liquidity run for us to just continue higher? Yeah, it could. We're in an overall bullish market. We can't be so quick to judge breaks of structure to the downside when we're bullish, right? So what would be more highly probable is if we come into this supply, have a reaction, make a lower low again, and then pull back to short off. But again, I will be eyeing this level in here for potential shorts. So that's GBP CAD. Now going over what Aiden said on GBP AUD, very similar to Euro AUD, is we have that 30-minute, 1-hour level of supply in and around this 1.881 cycle level. So we are overall bullish. That is something that we can't neglect. Okay, we are making higher highs and higher lows. However, we haven't come into objective yet. Now, I think that potentially either this level here, which is really our last selling volume before the higher high was created, because we can see higher high, higher low, liquidity run, sell to buy. Higher high, higher low, liquidity run, sell to buy. All right. So we could come back down into that level of demand before going long. We haven't reached that zone yet, or we have not come into that level around 1.8560. Or we could come lower, take out sell side liquidity here. We have 1, 2, 3 touches of this trend line, maybe push down into this repricing event, this area of demand on a lower time frame, because we can see liquidity run, huge sell to buy. We had that repricing, but it never mitigated. And we have sell side liquidity here. So could there be an excuse for price to come lower, sweep that liquidity before going long? Potentially, yes. So with that being said, either way, we're still counter trend bearish before hitting this level, right? So we've made a high, we've made a low. We could have easily made a higher high, but we didn't. We stopped and we mitigated an inside level of supply, and we made another lower low. So at least now we know we're probably counter trend bearish. So where's our last selling volume, or excuse me, buying volume on the counter trend? Well, we have a high, we have a low, we have a high. That's where we mitigated that level. Low, failed to make a higher high, lower low. So this general level of supply could be a level in which we pull back into and then have one more drive potentially, and then potentially going long for a more of a higher time frame expansionary move. So that's something we could see. I will be keeping an eye on it. But again, if we come into these levels first before pulling back, the likelihood that we will react from this level and go short again is not as highly probable. So we just have to keep that in mind. GBP NZD, relatively the same thing. NZD and the Aussie dollar are seeing some strength. Could we be in for more of an overall retracement? Potentially, but we're still overall bullish. So how do we know that, like, when is this counter trend going to be over? Could it be over right now when we go long? Yeah, we're bullish. So we have to expect at some point we're going to continue long, especially because if we do our top-down analysis, we would see that this is a prior high in the market that we're likely to take. We're coming into this daily 50 now. So could we have a reaction, go long and take liquidity? Potentially. However, what I can say is that we did sweep this previous high. We did take that high. So could we be in for more of an overall retracement before continuing? Sure. So that is what I like to see. Since I'm looking for potential shorting opportunities, it's because I don't see any buy opportunities in here because it's all just like intra trend, right? I can be potentially looking for counter trend opportunities, but have to be careful. But I like the fact that we swept liquidity and are now starting to make lower lows and lower highs. So we could be in for a more highly probable counter trend trade. So remember what I talked about on, I think it was, what was it? Was it GBP CAD? Remember we had this level here. So we're more looking at, the break of structure, failing to generate that higher high into supply, making a lower low first and then pulling back to short it. That would be more highly probable. Same thing here on GBP NZD. We can see that we broke the structure, failed to generate that higher high into supply, made that lower low. So now it's more highly probable for another drive after a pullback into a low again. So that's why I'm looking for this potential shorting opportunity. We can see that counter trend, high, low, high, and then really this was our level of demand, our last level of demand. Didn't really get into it here, but that was sort of that demand to supply flip because we broke right through it. So we retested that level and then went short. So the lower time frame trend would be lower low, lower high, lower low, because we took out that previous swing low. So this is the expansionary move here, that range. So we're looking for overall retracements. Same concept applies. So let's look at the counter trend. So let me scale in so I can actually show you. Maybe it'll look more pretty. So we have a high, a low, sort of high, low, high, low, high, low, failed, lower low. All right, so that will turn into supply. So let's see, why not this level here? You're all asking probably why here. We made a lower low, that's a lower high. Well, we never mitigated this level. I mean, we could we see a reaction from that level? Sure, this could just be a lower time frame opportunity. However, I more favor this general area here, more of a sweeping buy side liquidity, having that huge buy to sell into supply and going short. So something like that is what I'd be looking for in and around that 2.012 level. All right. So that is GBP NZD. A couple more here. NZD Swiss franc. So what we talked about on Saturday was the potential for price to react from a few levels of supply. So really what we're looking for, this is the higher time frame, lower low, lower high, lower low. So this is the range. So whether we get a retracement into this level of supply and go short, or these lower time frame levels of supply up in here, and go short, doesn't really matter. So it seems like we're going to be making more of a further push to the upside here. And we can see that this was the end of the pullback. This is just one overall pullback, and then we made the lower low. So where's our last buying volume? Well, it was really right in here, because this is where we failed to generate the higher high. We made the lower low, and we swept liquidity. We had a lower time frame level of supply in here. We created liquidity. We had a huge buy to sell into that level, sweeping that liquidity there. Then on the lower time frame, we had very small repricing events right here and then right here. Just for the sake of time, I won't go over that, but that's why we're looking for those levels. But then when we consolidated here, we failed to mitigate those two levels, and we went short again. So I classified that as an extra opportunity to short if price were to just have a very small retracement and continuation. So it looks like we're going to be pushing up into these two levels. So we had 1, 2, and 3 levels here. So that's why we can split it up. Third risk, third risk, third risk. Now you're asking, what are these trades? Well, these are current trades that we're in. And we talked about this in our VIP section. I probably even talked about this on the live at some point. This is the end of the pullback here. Where's our last buying volume? Well, that's demand. That's our last selling before our last buying volume. So that last buying volume here within this counter trend, that's why we mitigated that level. Swept liquidity, buy to sell. Then within this counter trend, demand was resting in here. There's a mini supply level right there. That's why we had a short from there again. Then we broke this counter trend to the downside. We had a lower time frame supply in here. We swept liquidity, buy to sell. I love NZD Chef, AUD Chef, NZD CAD, NZD CAD. It follows smart money and structure and supply and demand very well. That's why I really like it. So I had 1, 2, 3, and then we have these 3 levels here. So that would be 1/3, 1/3, and 1/3, because I'm treating this as just one trade because it's just within one particular range. All right, so that's NZD Swiss franc. We're having those. So 5.7, another psychological level, very, very key. 5.739 or 5.740 in and around that level is what we're going to be looking for. USDJPY. So we're starting to see the break from our lower time frame wedge. I think that we are still going to go long. We're counter trend bullish at this time. We just have to respect the lower time frame structure at this time, right? We have 1, 2, 3 touches of this trend line. So trend line resistance is where people are looking to sell, but we're counter trend bullish at this time. We can see that sell side liquidity, that low was taken out just by a few pips. And that's where we started the uptrend. High, low, high, low, high, low, high, low, so on and so forth. So I talked about this on Saturday, and I said that we have a couple of options. We had a great opportunity. There's a 45-minute repricing event here. That's why we bought it. But anyways, I won't go into that. So this is our last selling volume here, right? So I wouldn't be surprised, because this is last week's low. I wouldn't be surprised if we swept last week's low. So taking all of last week's, anyone who was buying last week who are still in, taking their liquidity. So that's just why, when I look at, my overall direction, if I'm seeing, Thursday, Friday, they have a low right in here, we may sweep that low, the prior week's low, before continuing in the overall direction. So that's why I'm thinking, okay, well, if we do that, we could sweep all the liquidity in here before continuing long, and maybe it would come down deeper into that demand. So something like that, which would also be a sort of shoulder, head, shoulder situation, fake out of this huge neckline, fake out lower, and then go long, right? So enticing retail shorts. But if we just continue with the trend here, right, we can see that we had a higher high, a higher low, a higher high. So could this be a higher low into demand to continue long? Yeah, absolutely. We could definitely continue with this structure. So our first option is an area of demand here. So looking for some sort of sell to buy. If you wanted to be patient, you could wait for the sell to buy, the break of structure, and then the pullback to enter. You could do that. Or you could take lower risk here just to get in, maybe quarter risk or half risk, just in case we do end up going long and you get in at a really good price. Or what you could do is potentially wait for something like this. So this is our level of demand right here. It's really our last selling volume before that higher high was created. So we pushed into demand on Thursday of last week, and then we broke the counter trend. Low, high, low, high, low, high, low, high. We came up into supply. Here, let me just get rid of this. Go into the lower time frame to show you. Came up into, so this is supply here, right? Buying volume, lower low, lower high into supply, lower low again. Last buying volume here, lower high, failed to generate the lower low, higher high. So this becomes our demand level. However, since we have a potential head and shoulders and potentially more of a sell side liquidity run that we could see, I'm not going to be looking to just place an entry there. Now, what you can do, you can place, a very small position long from that demand level, because it could go long from here, especially because we're forming this wedge. So could this just be a huge sell to buy? Absolutely. But for me, I'm more looking at, okay, well, we have 1, 2, 3, 4, 5 touches, sort of 1, 2, 3 touches here. So we could see this huge fake out to entice sellers below the breakout of this retail wedge pattern or channel, whatever you want to call it, mitigate the demand, have a huge sell to buy go long. And if we fail to generate the lower low and make a higher high and break structure, then that would be way more highly probable to pull back and go long. That is something that I would be looking for 100%. So if we can create that today, right? Today it's almost 9 o'clock. So we're in prime New York session open. So if we can create this huge sell to buy to start New York and make a higher high, either today we have a pullback and go long, or maybe sometime throughout the week, we make a higher high, pull back into London, New York session and go long again, that would really be highly probable. So I would love to see some sort of sell to buy, reprice, continue. That would be that level of demand, looking for pullbacks to go long from that level. That would be awesome to see. So something like that. That's how we can sort of preview what could potentially happen. And then if it does happen, then we can react and we know exactly what to do. But we also have to have the understanding that, yes, we're still bullish. We have buy side liquidity, but could we come lower first, sweep everyone out of the market who's buying, take sell side liquidity, and then go long? Potentially. That's something that we could see. So just a few options there with USDJPY. One more on AUD Swiss franc. So looking for continuations long, even though we are bearish overall, we're still higher time frame bearish. However, we've come into a key level of repricing from 2020. You see how these levels are met time and time again. The same sort of stuff occurs. 2020 crash, COVID, sell to buy. We had that repricing, that selling volume, and then we made a higher high, right? So we finally pulled back all the way into that. Now we're starting to see a reaction. However, we still are bearish. We're still making lower lows and lower highs. So now that we've come into the higher time frame objective, we have to just be careful if we're going to continue to look for shorts. Maybe lower your risk a little bit. Obviously, still use good risk management, still very important. But counter trend, we're still, lower low, lower high, lower low, lower high. Could that be the case? Sure, we're still bearish. So where am I looking to potentially sell from? Well, we go back over here. You can see this is just one overall retracement, and then we made the lower low. So we wedged ourselves, we broke out, enticed buyers, mitigated a level of supply, swept liquidity, and then made a lower low. But in the process, we repriced here and repriced here. Those are our two levels of supply. So we've made that lower low. Could we have an overall retracement sweeping all of this buy side liquidity here, have a huge buy to sell and continue short? Potentially, yeah. So that these are our overall objective levels for potential shorts. But now we can see in here that this low was taken out by this low. We swept liquidity, failed to generate the lower low. We made a higher high in comparison to that previous high. So if we get an overall retracement, we could come back down into our selling volume. And if you look at the higher time frame, like the 4 hour, 6 hour, 8 hour, I like the 8 hour imbalance here. We're above the 8 hour 50 EMA as well. So sort of just getting deeper into this level in and around this zone. We have 5,940. So in that psychological level, something like that. But if we come into these two levels first and then have a reaction short, I probably won't be looking for buys anymore. Right. So just have to be careful, because even though we're still bearish, we have come into that objective level. And now we could see a potential, maybe an overall trend reversal, or even just an overall retracement, because we can see that on the higher time frame. This is a low, this is a pullback, this could be a low, this could be a pullback for a potential low. So we just have to be very careful, right? So yeah, that's pretty much all I have, guys. I don't know if Aiden has anything else to go over. I'll stop sharing, maybe allow him to.
Yeah, my favored setups going. I wasn't sure what you were going to cover or not, but mine were the UJ and AUD Swiss franc. But did you go over ACAD? Did I miss that?
I did not go over ACAD.
Okay. I do like ACAD as well, in addition to those two that I mentioned. So let me just see if I can share quickly. Now we're kind of short on time. Let's see. Can you see my screen?
Add that. There we go. Yep.
All right, perfect. So AUD CAD, yes, I understand we do have kind of relative equal lows here. However, I am looking for, and it looks like we might even just run it out now, but we have created very clean, perfectly engineered equal highs. You can see triple equal highs actually, or even quadruple, you could say. And so I was looking for overall retracements kind of down into this flip zone here, right, for that continuation to buy into that pool of liquidity. But I guess it looks like with news that just came out, we're just going to go ahead and run that out. All right. And so, yes, we are in an overall downtrend, and we do now have kind of relative equal lows here. Right. And so I think that will be the next objective, these relative equal lows, once we meet the buy side objective and take out these equal highs. So if I were you, I would be looking for that sweep, that run on buy side liquidity, and look for that distribution on the lower time frame and the break of structure back to the downside to indicate that we're shifting the narrative, right? And we're shifting that objective. And that's really all that drives the market, guys, is liquidity objective. Once one liquidity objective is met, boom, they flip it and they seek the next liquidity objective wherever that is. All right. And so if you think about the market in terms of it's only being driven into pools of liquidity, you start to kind of see these things happening in the future at a more highly probable rate, right? And so let's look for that kind of buy to sell, seeking out the buy side liquidity there, and then look for that distribution on the lower time frames. Let's see if I missed anything. I think someone had mentioned, why do you guys trade the crosses as opposed to the majors? I mainly trade the majors, guys. And Nate is kind of the crosses are more so, and exotics are more so in his wheelhouse. He just sees those markets better, and I kind of see the majors better. Just all a matter of personal preference. It's just that the majors really haven't been ideal lately. It's really throughout the entire Q1. I mean, if you look at Euro USD, it's really just gross, right? We're just kind of stuck in range bound on the higher time frame at the moment. And we do have some relative equal highs here on EU, and now some relative equal lows. So it's just gross. I don't want to be involved in this type of market. And more often than not, we've been seeing the exotics present more highly probable setups as of late. However, I did share GBP USD with our private group on Sunday evening, right? This is just a common sense trade. It was a layup setup, right? We had the run on sell side liquidity. We created a higher high, simply looking for pullback into discount, right? Following the trend and momentum to the upside. I mean, GBP USD has been significantly bullish for quite some time now, and we do have a higher time frame objective that we're running up into at the moment, all the way over here to the left, right? With this kind of pause in the market, right? Resting right above an old high. So I believe that's where we're heading. We very well could fill in some of this inefficiency here to the upside, but this is just my overall objective that I've been looking to continue to buy up into, with this just trickling to the upside, right? And so that was a common sense, no-brainer trade. Everybody should have taken this trade, right? If you understand smart money concepts, you understand the overall objective. It was literally just a higher high, higher low, discount, down close candle, right? We got that pretty close to wick entry, and we're obviously mooning now. So congratulations if you caught that, especially if you're in VIP and you saw that setup that was sent out, right? We're running right up into that objective now. All right, so that's really all I've got, guys, in addition to what Nate shared. I guess we can answer some questions now, if need be.
All right, what do we have, guys? Let's see. You offer one-on-ones. Yes, within our VIP program, yes, we do.
UJ is a major. Yeah, that's correct. I mean, it's not like Nate doesn't look at the majors, and not like I don't look at the crosses. It's just, I prefer to trade the majors. I follow them closely, and Nate follows the crosses closely, but I still look at it. pretty much all pairs. I kind of have to because, you know, I don't know what pairs, you know, our members are trading. And so I do like to scan across the broader market, see if I can find setups for you guys, even if I don't trade those pairs. Resume the Smart Money Sundays, please. Yeah, guys. Sorry, we've just been crazy busy launching, obviously, our prop firm automation service, as well as our kind of account management. And so we'll have Smart Money Sundays back consistently, hopefully starting this weekend.
Any bids on risk management? So we kind of went over that at the beginning of the session, Brandon. So if you just want to like maybe review what we talked about, what I went over, I mean, to be quite honest, you're not going to get much better than that anywhere else. It's not really that difficult. There's no like specific training on risk management that you need to know. It's really just simply going to the position size calculator and typing in your parameters, keeping your risk the same. Every single solitary trade. There should be no point in time where you're just arbitrarily picking a lot size to use on a trade. Never, ever, ever, ever. That's just not professional. And we know that if we don't practice professional habits, you're going to continue to lose. And this goes for everyone. So if you are not using risk management, just ask yourself the question, am I using good risk management? Am I doing my due diligence and taking the time to figure out my exact lot size to use based upon my account balance, the number of pips my stop losses, the pair I'm trading? You know, it's very important. If the answer is no, well, then no wonder why you're losing, right? If the answer is yes, well, continue doing so because that's a really good habit that you need to maintain. And remember, guys, you know, different pairs have different pip to dollar value ratios, right? So one standard lot on Euro USD is going to be different than one standard lot on GBP CAD. They're different because the exchange rates are different. So stuff that just simple stuff like this is something that we all have to know. Brian, I'm not quite sure what you mean by that question. Would you rather be stopped out at break even on the first trade after hitting first TP and look to re-enter as opposed to moving stop loss below the swing low and reducing risk by moving stop a little bit? Sorry, maybe I'm just reading that wrong. I'm not quite sure what you mean by that. If EG came a few pips away from your overall target, I mean, it's really just a matter of personal preference. I mean, I personally like my zone of interest to be met. Not to say that it has to. There's no right or wrong answer. The market's never going to give you 100% guarantee every time. Sometimes it may come a few pips and then absolutely move, or it may not come a few pips away and hit the actual target and then move, or it comes a few pips away, pulls back, and continues short down into that objective. It's all dependent upon the setup. There's no right or wrong answer. It's just all about maintaining risk and keeping with your trading plan every single time, knowing that the same exact setup, one trade may win, one trade may lose. That's why it's so important to get into the habit of not caring if you win or lose. If you have a profitable system and you're following that said system every single time, no matter if you're winning or losing, you're always going to be naturally profitable in the long run, right? That's what we all need to be looking towards, right? Having one bad week of trading or 1 month of bad trades, people get all emotional. They get all berserk. And that's that emotional childlike state is not going to get you profitability. It's just not. I've had bad months before. Do I care? No, because I know my system works in the long run, and that's all I care about. If you're thinking too much on the short term, the long term is never going to help you, right? And it's just the harsh truth. There are people who make a lot of money in one day or a lot of money in 1 week, and then great, that's awesome. But can you consistently do that? You can if you are sticking to your trading plan, knowing that you're going to lose. 1 week may be good, 1 week may be bad. 1 month may be good, 1 month may be bad. But it doesn't matter, because if you know your system works and you're following your rules every single time and attacking the market the exact same way, no matter what the prior trade's result was, it's going to work out for you. It's all based upon statistics and numbers at the end of the day. But, you know, psychology is definitely a difficult thing to master, and no one can really master. I mean, we're all humans. We all have emotions. I still struggle with psychology in a sense, but it's not like as bad as it was when I first started. I just have to be able to control myself in a sense. I mean, how do you choose trading pairs? It's really just through experience. I mean, I never found out I liked NZD CAD and AUD CAD until, you know, just years and years of trading it, and just I've naturally had good success on it over other pairs. I just like the way that it presents price and delivers price. It's the way that I kind of like it, and it may not be for everyone. Like, just because I love NZD CAD doesn't mean that you will enjoy it. Like, Aiden loves EUR USD, but do I enjoy trading EUR USD? I mean, sure, there are setups on it, but I prefer NZD CAD just because of my own trading personality. I would probably stick to anywhere between 3 to 7 pairs. I wouldn't go any lower or any more than that. It's probably a good amount of pairs to look at. When you're trading with a prop firm, when we have long-term trade, how we manage risk management, no point of trying to hit 10% a month. If you can get 1 to 2, 3% a month, you're golden, right? Because someone who aims for 10% has a extremely high probable chance of losing that account because they're risking an insane amount, and there naturally will be a losing streak at some point. So would you rather have 10 on a 100 grand account, would you rather make $10,000 your first month and then lose it your second month? Or would you rather make $2,000 each month for an entire year? Right? It's all about a matter of delayed gratification and risk management. No point of trying to go too quick, too fast. So yeah, I mean, it just comes down to not trading every day. There's not always going to be a setup every day. Just because you haven't traded all week, maybe it's Wednesday, like today, let's say you haven't placed a trade yet. People who can't manage their psychology well will try to force something because they feel like they're missing out. They feel like they're missing out on something because they're not involved. Well, you have to just look at it from, are my setups there? If the answer is yes, well then attack the market the same way. If the answer is no, you have to learn to just sit on your hands and use risk management every time. Even trading with 0.25% risk per trade on a prop firm account, that's really good. You don't need to go any higher than that. It's all about the long term. Because prop firm doesn't allow to hold trade during weekends. I mean, some prop firms do, some prop firms don't. I mean, whatever prop firm you decide to go with, you just have to understand those rules. Just not much else I can say about it. Is it necessary that the head should be higher than both shoulders when I see so many concepts present itself, head and shoulders? I mean, not always. You could have both shoulders be higher than the head. I mean, it's just the whole point of it is seeing where retail is likely to get in, where the liquidity rests. So it doesn't really matter what the head and shoulders look like. It could be a skewed head and shoulders, could be just a typical head and shoulders. The shoulders could be higher than the head. I mean, it just all depends on.
It's the logic. It's the underlying logic behind it, right? Because what is the neckline? Right, the neckline is where they're pulling the liquidity, right? Where retail traders are selling upon the break of the neckline, right? They've got the sell stops there, selling the breakout. And in reality, we understand that's just a liquidity purge.
Yeah, and yeah, just like Tim said, if you guys have a Nova funded account, you guys are trading it, and you want to hold trade over the weekend, I mean, as long as you're not over leveraging, which you shouldn't be doing in the first place, ask for an extension before the market closes, and you probably will be granted it. Best way to train discipline. I mean, these are very, very broad questions, guys. Experience, really. It's just understanding what the right habits are and just practicing. There's no one thing that's going to just be your holy grail or golden answer. It's just understanding what is an appropriate habit to get into, like risk management. Now, if you don't have a trade, don't trade it. If there's a setup, attack the market the same way. I mean, but practicing it every single solitary day and seeing, based upon your trading habits and what you're doing, observing your own emotions. How am I feeling during the trading session? Do I know that I'm over leveraging? Do I know that I'm revenge trading? Do I know that I'm doing these things but still doing it anyways? It really just comes down to a matter of discipline. A lot of the answers in trading just come down to experience. Like I asked the same questions when I first started, but realized that, over my years that I just needed to have experience with it and just practice it. Do FX pairs have their personality? Any examples? I mean, everything follows smart money. I mean, the markets are all driven by these institutions and higher orders and liquidity. It may look different at different times. I mean, there's not like a specific way that NZD CAD moves versus Euro USD. They all follow smart money concepts the same way, but it may just look slightly different for every setup. I just tend to like NZD CAD, AUD CAD, all that stuff. So there's really no example that I could give besides just like, NZD CAD follows structure very well. It follows beautiful wave play, beautiful expansions, beautiful pullbacks, just very nice wave play, very easy to see liquidity runs, very easy to see supply and demand zones. But that's just my personality though, right? Aiden may not like NZD CAD, who knows, but I do. So there's not like, oh, well, NZD CAD will always look like this in the way that it forms its setups versus Euro USD that always looks like this. I mean, it's gonna look different every single setup, but there's really no personality per pair. You just have to kind of get to know them a little bit. And you'll kind of understand what I mean. It just comes down again to experience. Let's see. Oh yeah, you guys who are interested in fund management. So of course, we said that Nova, we currently don't have any more spots available. However, we are looking to come out with a few more prop firms here in the next few weeks to the next month. So spots should definitely open for those. So if those of you who are interested in fund management, we should have spots available, hopefully in the coming weeks. But again, don't quote me on it. We're still working towards it, but that's our overall goal. So just a little bit of an update there. All right, anything else, guys? Any other questions I can help you guys with at all? Hopefully you enjoyed the session. I appreciate your time today. Remember, there will not be one this Saturday. I have some stuff going on Saturday morning. I will be unable to do a live session, but we will be having a Smart Money Sundays.
Yep.
We have calculators for risk. Yes. So if you type in on Google position size calculator, I'll even just pull it up for you. You type it in, right? Position size calculator. Boom. Click it. It's by MyFX book. It's the first one that pops up. You should come to this little screen. And here's what you can do. Whatever currency pair that you're trading. If we're trading USDJPY, we type in USDJPY because pip to dollar values will be different for every pair. Whatever account you're currently trading with, I'm in the States. I use USD. That's my account currency. Account size. So I have a $100,000 maybe funded account or whatever. Then that's what you would type in. Risk ratio, let's say 0.5%, so 0.5. Stop loss, let's say it's a 27 pips stop loss. You type 27 pips. Keep the trade lots at 1, just keep it the same, and click calculate, and it gives you the lot size to use. We take this down to, I don't know, $1,693 in my account. Let's just say that, right? The same parameters, you click calculate, that's the lot size you use. It keeps your risk the exact same. There should be no excuse for not taking a minute out of your day to go in and calculate the exact lot size to use for your specific trade, right? That's why we have risk to reward ratios, right? So We're starting to see that reaction from this level, just like we mentioned. I'm not currently in this. I'm waiting for more of a sell to buy. I want to see that manipulation lower, which we have. I want to see that follow through. If we get the pullback after that, then great. So let's just say you were looking to trade this. Pull up your risk to reward tool. It's right in here on the side of trading view. Long, you click the long position, pops up with this. Let's say that was your entry. Your stop loss, let's just say it goes below that low. And your take profit, let's just say the previous high. Okay, 1 to 4. So you go here, USDJPY. If that's your account, let's just say your account balance is $2,500 even. 0.5% risk on it. Stop loss is going to be 85.7 pips. Shows it right there. 85.7. Calculate, gives you the exact lot size to use for that particular trade. Just so if you lose that trade, you're losing 0.5%, and it keeps it streamlined every single solitary time. So it's so simple to use, guys. It really is. There should be no excuse why everyone is not using it. Right? We all should be using it. Like risk management is so easy to be disciplined with. You just have to do it. Yeah, Brian, just send a chart pic for me so I can visualize it. All right, any last minute questions that I can help answer? I don't know, Aiden, do you have anything else? I don't think I have anything. All right, guys. Well, I appreciate your time. Thanks so much for hopping on. And we will talk to you all next Wednesday. For those of you who are tuning into the lives, for those who are part of our VIP, we will speak to you all today and if not tomorrow morning. So take care, guys. Have a good one.